Hey guys, Phoenix here back with another educational session, and today we're gonna discuss about candlestick. And at the end of the video, we'll also discuss about the risk management tips from my side and how to begin with trading, how to increase your portfolio in a slow, continuous manner rather than just losing your profit after several trades. I found that people mostly after 2 3 successful trade they they don't have any certain strategy of using a certain percentage of portfolio, and they end up losing the profit at the end of the day. So at the end of the video I will also discuss about how to manage your risk so that you don't diminish your profit. All right, so we will discuss first about candlestick, and if time permits we will have some technical analysis on Bitcoin. So very first thing we will discuss about what are candles. So whenever you open your trading view chart for chart analysis, you'll find that on the right or the left axis there is a price action, and this there are candles, bunch of candles, moving upside and downside. So these candles are basically the price action. Either bulls have extremely ragged the bears by just pushing the price higher and higher, and we get the green candles, and the red candles are basically showing the presence of bears. So let's just see what a candlestick. So basically the green candle always. Okay, so this is so huge wick. Okay, so the green candle always start from the bottom side. The Let us consider the very after after the end of the previous candle here. This this green candle will start immediately after the price at which the previous candle was closed. So the green candle will start right from this price range and will close up to this price range. Here we are just taking for the example that, so always the green candle start from bottom to top, and you take for the as an example of a red candle. So red candles, you can take this way. After after the bulls have tried to push the price up, the bears tries to sell or push down the market. So at this point the candle starts from top and end up at bottom, and we get this sort of red candles. And these green candles are like, you can see here, the green candle starts from bottom. As soon as the price and this at this range, the next green candle will start from right here and it moves upside. Just look for the body right now. I will also show why these wicks are formed. So let's just discuss what are wicks. So wicks are nothing but bulls and the tug of war between the bulls and bears, and the ultimate candles color shows the either bulls or bears are, there is significance of bulls or bear in one side. So how these wicks are formed? Let me remove all drawing. No, I can't remove. So let's just take a green candle. So the thing is, as soon as the green candle opens from this side, from this price action, and tries to move up, the bears try to reject it. As soon as this candle start from here, the bulls try to push up the market, and you can see a sort of candle is forming. And suddenly the bear comes inside and try to push down the market. So earlier this candle reached up to certain price range, and now the bears are trying to push down the market, and as soon as it push down the market, we get the wick like this. So let me Sorry, I already use. So as you know, they are just the candle starts from right from this bottom green candle, and the bulls try to push the price action upside, and they try to push up. As soon as it reach a certain price action, the bear tries to sell, and you can say a push the market downside either than going upside. So as soon as the bear try to push the bull downward, we got this wick, and this wicks are actually very much helpful, and it shows a presence of bear at this price range. Similarly, if we go for the red candle, the red candle, as we know, it begins from top and ends at bottom. So as soon as this candle starts from right above the top, the bear try to push the market downside up to certain point where they where the bulls comes in and try to push the market upside. And as soon as they try to push the market upside, a wick is formed. You can see, if the candle close like this, where a certain point where bulls try to push the bears upside, we get this sort of candle, and this sort of candle is called a hammer candle. You can remember the Thor's hammer. Whenever the Thor's hammer comes in the picture, that's a reversal of market. So in this form the candles are formed, and you can also, sometime it happens like this, the bears are rejected suddenly high that they push upside until the bears get exhausted, and this candle again forms a hammer candle, and we get a green candle on the chart. So just understand right now the what are wicks and how they are formed. The wicks are basically formed by you know um, formed by either bulls or bears depending upon the candle, and it shows the significance of bears or the bulls in the market. So this one is dodgy candle, this one is hammer. So I'll put a link in the description that this website is called Baby Pips, and it's actually helpful for the beginner. And you can also sign up and go for certain sort of courses they have available that's free. And we'll look at some of the candles. So these candles are called spinning top candles. They can be the red, I mean, should say a bearish candle, or suddenly the bulls were rejected and we get a green candle, or a green spinning top, or a red spinning top, depending upon market condition, or the presence of bull. So it's a bullish or bearish signal, so it's a neutral signal. So I'll put the link in the description of this website. It's actually helpful for the beginners, and let's just look for a few much more examples. Second one is doji is again a neutral signal, as I discussed how dojis are formed. This are called the dojis. If the weak is upside, it's a doji. If it's downside, it's a doji. And if it's sometime it's like this, this is also a doji, this is also a doji, and if you look at this side, this is also a doji. So all three types are shown here, and you can see certainly this type of candle, this is also sort of doji. Only the bears and bulls actually, there was a tie between the tug of war between the bears and bulls, and hence we get this sort of candle. So this is also a neutral signal. Okay, so this white marubozu. Now certainly guys, whenever you are trading any asset, and if you find any candle is fully filled, what I mean to say, like this, let's just look at example, and you can get a much more better view. So basically what the marubozus are the candles without wicks. So what this actually uh, you know signifies you, it actually shows you that there is no presence of either bull for the green either bears for the green candle and bulls for the bear candle. If there are no wicks, like we can say this candle is fully filled. If you avoid this wick, I mean if you avoid this wick, this candle is fully filled. I just start right from the bottom without any wick, and there was no bearish rejection in this whole candle. you can you can see, if you just avoid this candle, sorry, this wick, you can find this as a completely fully filled body candle. This is called body and this is called wick. So whenever you find such candles, starting from this is also a certain sort of this candle. You can't find absolute example of Maribozu, but you can take this sort of example as Maribozu. And Marubozu, yeah. So as soon as the market start right from this candle and there is no sudden rejection from the bad side, so this is completely bullish sign. And such for trading such a candlestick, it's very easy. Like you just take a channel. Let me show you how I trade. You can take a parallel channel, right, and just try to mark these 2 points. Make a channel. You have to basically find the middle point. When you see such body, you just mark with the middle point, and certainly after a certain candlestick, it will try to retest the middle of, or you can say half of this body. You can see certainly this candle was bounced after retesting the, you can see a median line of this body candlestick, and suddenly you get a bounce upside. So mostly the investors, or you can say a swing trader, use this candlestick and just they mark the middle of this whole body and try to beat right about this point. And if this candle close below this point, it's a bearish signal, or you can say a reversal signal, because it shows the lack of presence of bull at this price range. So let's just take this example. I think so this example was actually bearish, but certainly we got a move upside. Let's just make a channel for you. Yeah, so actually they tried to push down below, but they were actually unsuccessful, and the bulls try to push upside. So this is also one, this candle is a tweezer bottom candle. So we'll also look on this first and we'll go ahead. So actually I was showing you what is Maribozu, and it actually is really a bullish signal or bearish signal depending upon the candle. If it's green, it's bullish. If it's red, it's bearish. Alright, so this all candles are a single candle, the hammer candle which I do. Whenever the Thor comes inside with the hammer, it reverses the trend. So this Thor's hammer is actually reversing your patterns, your market trend. So whenever the Thor's hammer comes in, the market reverses. So I have shown you the typical example of hammers. Hammers are basically like this, and small wick downside. Okay, so wick can be either on upside or downside depending upon where it's forming. If it's forming right in the bottom side with a wick downside like this, so it's again a bullish signal like this. And if the wick is forming on the upside like this one, so it's a bearish signal for market reversal. So these two types of candles are, this type of candle is called a hammer candle, and the wick can be either upside or wick can be either downside. Alright, so just remember one thing, whether it's a green candle or red candle, it doesn't matter. Wherever it appears, this Thor's hammers appear in any in charts, or you can say in any um, trend. That's a reversal. So let me show you one example which found very easily. This candle, you can see this is again a hammer. This is inverted hammer, but it also shows the significance of both. Let me show a typical example, guys. One thing remember, guys, that you can't find the exact example of you can say exact copy paste of this sort of candles, like hammer. It has small wick upside. Like this is called this is a hammer candle. So we will also discuss how to trade this, how to make use of such candles and trade. So this hammer candle, this shooting star, is just an inverted hammer, and it appears on the when the market is trending bullish. And you can say evening star is similar like a shooting star, but it appears on a downside. You can say whenever the market is bearish trending downside, you can say the evening star appears at the bottom of the trend, and there is certainly a reversal. So we were discussing about the single candlestick. Now we will discuss about double candlestick. So the thing is, you can't basically I post in a telegram group about we need a confirmation before going in. So you can't just make use of a single candlestick and you can go for trade. So better we can make use of confirmation trade by using the double candlestick. So here are some of the double candlestick. So there is a bullish engulfing. It itself means to eat the previous one. So if the candle eat the previous candles, even a single candle or the double candle, it's a bullish sign. If there's a green candle, if it's a bearish sign, if it's a red candle. So engulf candle is, so let me show you the example. Let's just say this is the green candle, right? And after the very next candle appears like this with the red boundaries, I mean to say a red color candle. So what you can say, this red candle is actually eating away this green candle in price action. You can see the candle begins right from upside and it ends from the downside. So guys, there can be a wicks above and below. You can say there is a wick here. There can be a wick above and below. Basically the fundamental thing of engulfing is to eat away the previous candle. So this candle is eating away this previous candle, and if this candle is like this, so now it's a bullish sign. The thing is, this candlestick is eating away the, you can say the bulls are eating away the bears, and hence it's bullish. We will also see how to trade this type of candle. Basically what we should do is just mark the previous candle's high. You can say this one is engulfing candle, and hence you will look one more. You will go to the left side of this candle and mark the high of this candle. So you can see the candle was open right here, and we might mark this candle, and we will enter right here with stop loss like this, and we'll target a upside. This is the way how or I can say how I trade using the engulfing candle. And this let's just go ahead and discuss few much more things, because it will take a long, and this session is actually gonna be long. So this one is bearish angle, this one is bullish angle. So tweezer top. So I was telling you a tweezer top, you know the meaning of word tweezer are like, uh, I used you used to catch some sort of small elements, is a tool to catch some small elements. Or you have seen that girls will be using for eyebrow and everything. So let's just not discuss such thing. But tweezer tops are, to remember things, you must make it much more funnier. So I just make it much more funnier because the girls use the tweezer tops. I can say a tweezer, and that always give me a hint about what a tweezer. So tweezer tops and tweezer bottoms. So tweezer mm, yeah. So this is the example of tweezer top. Sorry, I just made a wrong candle. So tweezer tops mainly are formed at the top of the trend. So the name itself says a tweezer. Tweezers are happening at the top of the trend, so it's called a tweezer top. So tweezer tops are typical like this sort of example, tweezer tops. And if you look for the tweezer bottom, this is the tweezer bottom example where when the bull candle appear right after the red candle. So there can be interchange in the candle. It's not like you want for bullish candle you want just green candle just after the red. It's not necessary, but the tweezer should be very much clear. Like it should have wick only on the one side and not on other side. You can see here there is only wick on the downside here because it's a tweezer bottom and not on the upside. So as I said, this candle, if it's green candle, it's actually very much bullish, and you can enter just after the break from the previous or you can say a left side candle high. So always remember guys, so just trading candlestick, whenever you never use the confirmation candle for trading, you always use its previous candle for trading, for entering a position. And for stop loss you always use a confirmation candle. So if I enter right, I will enter right above this candle. I will put my stop limit right here. I'll put my stop loss here, and I will just ride as per my target price. So this way we trade the tweezer bottom, and similarly we can go on the upside, or you can say for bearish tweezer tops we can just reverse this scenario. Let me make bearish scenario. Okay, so this is the bearish tweezer top. So what we will do, we'll just look for the previous candle is green one where it's high, like here, right here. So sorry, in bearish we have to just look for the low, right? Because we want to short sell after the confirmation. So we'll add a short right after this with a stop loss right above this body, or you can say you can take a weak or body. It depends upon the price action of any asset, and we will target downside as per our target. So this way we trade the tweezer top or bottom candlestick. Now we will look for morning star, evening star. So I just discussed about that. You can see a shooting star. So this all these terms are actually pretty confusing, but I want to only say one thing. If you see any sort of candles like this shooting star, or you can say a dodgy type of candles, it's basically a reversal candles. So I won't confuse you guys by using terms like morning star, evening star, and shooting star. So shooting star is related to hammer, and morning star and evening star are related with dojis. Alright. So three white soldiers are like, when actually three white soldiers are very much bullish. Let me show three white soldier. So three white soldiers. Oh my god. So three white soldiers appears in this sense without wick. So this is a example of three white soldier where each candles are open one after the another without wick. So you can say a market start right from here. It close, the first candle closes here, the second candle opens right after that candle, and it moves upside again, next candle, and move upside. Whenever you see this type of candles, this are called three white soldier, and if it's red the downside like this one, it's called the three black crows. So these candles are also used for trading, but what I generally found is after these three white candles, there's certainly you will find two red candles right here, and then it will move upside. So that thing you can experience by trading much more assets, and you will come across such situation where immediately after this white soldier you will find some sort of red candles, and that can be of any size or length, and mostly the people panic and sell it, but it's actually a bullish sign. Let me show what. So this is a typical example where whenever you will see a three white soldier, it mostly follows two red candles, and this is a point where actually smart traders can enter the position by just marking this point, entering, and you know what I say. uh, this is a confirmation candle, this one is your entry candle, right? You will mark this point as your entry position, this entry position, your stop loss will be this, and you can just target upside as soon as it break upside. So either you can enter your position right after this, or you can enter the position right after this, after you come across this white soldier, three white soldier. So if you want to use the breakout strategy, so after, as soon as you see a three white soldier and a pullback, you have to just enter after the price action move upside, and mostly it will be an engulf candle like this. um, like this, and you have to enter, and you have to just put your stop loss right here. Sorry for that. All right, so this was example of three white soldier followed by pullback, and you will find the bullish engulfing candle. I'm not showing wick here because it's actually tedious process, but we'll take a real life example. You can say a real life asset trading example. So I'm just giving you overview how to trade, so that it get imprints in your mind as we discuss, or as we move forward in this analysis, or you can say educational video. All right, so we just discussed about three black crow, three inside up. So this inside up is like this only. Inside up, uh there is not such a, I think so you should avoid this because it's, you can hardly find about this thing. So just all right, so let's just discuss about inside up. What is the inside up means? Whenever you find two candles followed by one single pullback like this, and for certainly a third candle has go upside. So this is this two candles is upside, this is inside and up. So it's called an inside up candle because it's a bullish candle. Inside up is bullish candle, inside down is a bearish candle. So this is what all we discuss about candlestick basic foundation, and I will put the link in the description. This website is actually fabulous for beginners, and you for just have overview, or you can say few much more examples you can find on this website. I will put the link in the description. And this was the first website which I came across when I was learning candlesticks. So yeah, this I would recommend just to go and look for few bunch of videos which they have shown you, and it's pretty much interesting videos. Alright, so let's just look for the real life example on candlestick. Alright, so very first thing, guys, I want to share is candlestick works better on higher time frame. So you can see the higher time frames like 2 hours, 4 hours, and daily, weekly. So I don't mean by just it works on higher time frame. No, it also even works for the 5 minute time frame, but only for the scalper. If you are a scalper, you know how to trade this uh, candlestick on 5 minute or 15 minute time frame. So I don't think so we should go that much detail about scalping strategy using candlestick. We'll just go today for uh, swing trading using candlestick. So we will use 4 hour time frame or daily time frame depending upon which type of swing trader are we or are you. So let's just go from top to. All right, so yeah, we will discuss first about a fresh market. All right, so PTC is right here, right? This candle is sort of doji candle. So what we will do, even I don't know where the market will trend, right? Just for the example, I know, but we have discussed in the previous video, we know there is a gap beside right at 7 to 100 range. Where is 7 to 100 range? It's much more below right here. So there is much more possibility of going downside rather than upside. But for example, I am very much new to this market, and let me check whether candlestick analysis works or not. So this we will check out this, but let me show how to trade using candlestick, right? So we find this dodgy candle because there was a rejection by the bear side, and we got this fix because there was a tug of war going between bears and bulls. So what we'll do, we'll just mark this candlestick using arrow, so it always reminds us that there is presence of bears, and we'll mark this above point and we'll mark this below point, right? So now we will follow the breakout strategy, right? Breakout strategy I will discuss in next educational video, where we can safely enter and exit using this breakout strategy. It's actually way long. It can be for discussing the breakout strategy, it will take from few minutes to few hours. It depends upon how we discuss in detail about the breakout strategy, but today we just discuss about the basic of the breakout strategy. So we'll look, this is a doji candle, this is a bearish candle, and we'll just mark the above point and the below point for our reference, right? So what we'll do, if this candlestick close upside, so we'll enter our long position with our stop loss right below this candle, and where we can target the previous high. If luckily Bitcoin breaks above this, we can target much more above. That can be 9,500, 9,400 range. So I am just giving you a hint about trading the Bitcoin using the breakout strategy. But if it breaks downside, we have a short opportunity, and we know if you have watched the gap trading video, it's very much easy to target 7 to 100. It's very much easy to target 7200 because we know the gap's gonna fill in any sort of situation. So the same thing applies right here. If this price action breaks below this candlestick, we gonna trend downside. That's for sure. That's for sure, guys. I don't know if whether this gap gonna fill right at this breakdown, but we can target the previous low, right? That can the gain can be almost like 70% of the gain just by using candlestick. So it's fabulous to trade just candlestick. So this is the live example, and I hope I don't want to put a call on this trading XBT on our group, because if you are very much attentive on how to trade candlestick using breakout strategy and support and resistance lines, I'm sure you're gonna take this trade. Alright, so this is the trade which I personally want to share with you guys. If it falls below this line, we are very much like to retest the previous low, and if we break this candlestick high, it's very much sure we're gonna move upside. Like you can go like 9500 or 10k, depends upon price action or where we have to go, where the market goes. Alright, so let's just move beside and we'll find some candles. You get this is called an evening star, or you can say you can see this is a doji candle, and you can see this is an evening star, morning star. So your morning should be like full of cherish and happiness. So same thing goes here. If your morning starts with the bull green candles, you are much more happy, and hence they gave the name as a morning star. Whenever you see the morning star, it's a reversal signal. How to trade this is so easy, guys. I'm just using 4-hour time frame. So while you practice candlestick on other asset, you can practice on Ethereum. If you have any sort of doubt, you can just PM or DM me anytime, and I will try to solve your problems. So yeah, surely I gonna solve your problem. So I want that you guys practice on Ethereum, and if possible you can send me the snapshot of your problem if you come across any trading problems and not your personal problems. All right, so how we will trade, like this is called a morning star. Your morning should be happy, and hence we get a green candle. So we'll just mark this point, right? We'll mark the above and below candle. This candle, we'll mark this point, and we'll mark the below of this candle. So what's our next target? We have to just end the long with confirmation of the previous left. We will just add the long after the price action move upside this candle, this previous candle high, this previous candle, that is 7660 candle high. You will add your longs right here. You will put your stop loss right below this candle, right? And you will just target previous high. This is high, yes. This is high, yes. This is high. Just target here. This is high, yes. What's your risk to reward? It's more than one. If it's more than one, it's worth taking the trade. So that's a 50% of gain. And you have come across such candles like this one. This is again a reversal candle, but second candle is like this candle is again a doji candle. You must have a doubt about this, why this market was trending upside even after this candle appears. All right, so this candle is actually a bearish candle, but look for the second candle, how it invalidate this candle by moving upside. If this is a bearish candle, if this meant to be the bearish candle, the price action should close below this candle, right, about like 700, but it instead move upside. So this invalidates this candle. Similarly goes here, this invalidates the candle. So here you just you can't trade just using candlestick. You have to also look for the support and resistance. So if you look at this candle where there was no sort of resistance at any level, the resistance was like this at this range. The resistance was at this range. Now it's acting at support. So that shows that this market will trend upside. Where is the resistance here? On the left hand side, if you look for the resistance, so you can say this is a common point resistance where the market can take a halt for few days. And yes, it was acting as a good resistance here, right here. So just adding right here, exiting at the resistance level, you can make few bucks, like without any complex strategies like Elliott wave, Wyckoff theory, Gann, Fib. All these are so complex trading strategies, but if you don't know candlestick and you are trying to put your everything just behind Elliott wave and Wyckoff, it's a waste of time. So very first lesson we should go is learning candlesticks and support and resistance. Support and resistance is everyone knows about it, how to make support and resistance. If any candlestick touches any price action range for 2 times, it's a support or a resistance. If you touch 3 times, it's strong support and resistance. If you touch 4 or 5 times, it's much more strong resistance or support. So I don't need to explain what is support and resistance, and hence I'm just moving forward. I look for much more examples. So this example is as we discussed earlier. This example is, you can see, a fully filled candle, and such candles are actually a bullish candle. You can see the market begins right from here and ends here, and there was no sort of rejection on the buy side. And such candles are always act as a support at median line between this candle. So how to find this median line? Not a difficult task. Just take a channel, you can say a parallel channel, just take from body to body, just make from body to body, and you can see it's acting as support here. You can see all over it acting as a support. Can you see that? So one basic thing about support and resistance I want to share with you guys is this thing. You can see this is called a bearish trap, where actually the bear tries to push the market downside, but the bulls move the market upside. So whenever you find such patterns, like whenever you find near support or resistance, such type of candlestick, when the bears try to push the market, rejected again rejected, you find this candle is what your morning star, and your morning should be always happy. So this candle is always followed by a green candle, and you can see that second candle was actually a green candle. So your morning was much more happy. So how to trade this, I just showed you. Mark above and below point and just add for the long. The below point acts as a stop loss and above point acts as a entry point. Alright, let's just move by side. So remember this type of candlestick trading strategy. I mean to say, whenever you find such type of candles appearing near support or resistance. This example was near support, where the bulls actually take upside the market. They took the market upside. Such patterns are very much profitable, because you can see that now this support is actually acting as a strong support, as the bulls rejected by very first thing is by making a bullish candle, and second thing by the retesting it more than 2 times. You can see this candlestick was retested here, Again, this range was retested, and certainly the bulls take over after uh, hitting this price range. So all remember this guy, you take a screenshot, you do whatever you want, but always remember this type of example because it's appears many times in BTC. Let's just look for candlestick right here. So yeah, you can look here, that's a inverted hammer candle. And again, how to trade this, like we'll look for, on the back side, like we'll take for the historical data for resistance. Is there any sort of resistance at that level? Let me check it. Yeah, so you can see there was a resistance at this price level, and we will look for the lower time frame, that 4-hour chart. We got this candle, bam, we got this candle, that's a inverted, or you can say evening. At evening time you are very much exhausted and you have to go back to home. So similarly the bulls go home and the bears comes in. So you can see there was a rejection. This was a evening star, or you can say inverted hammer. You get an inverted hammer right here. And how to trade this? It's very simple. Just add your short and your stop loss right about this. So guys, never ever put your stop loss right about the previous retesting resistance. Just put few percentage upside for the short position and just target at the below resistance levels. So you can look that this this resistance was right from this price range, and you can target up to that price range. And hence you get 80% of gain. So sorry guys. All right, so this was one of the trading opportunity using candlestick. Let's just look one more example and we'll discuss about risk management. Let's just look for past historical, that 6k range. Is there any possible? All right, so let's just look right here. So at this moment the market is so much choppy, and see guys, see what I said. Look at this. Such type of examples appear very rare, and it's actually people actually forget such type of candlestick pattern. So there was a resistance right here, and bulls try to move upside, they were rejected, they were moving sideways, and suddenly a drop below that resistance point. This shows that there is a bearish presence, and hence the market moved downside. You can look at this example. This is typical example of the doji candles are neutral, yet they are the reversal candles. And what you can do, just add your just add your position below that, which stop loss had previous high, and there was resistance at right at this level. So that gain can be 2.5. And if I say I have discussed about this thing, if you are a smart trader, you look for the trend. Where is the trend is moving downside, so there is no any reason to get outside the market. So let's look for one more example. This example is not good one. Let me find some. So only 3 things appear much more. Okay, so this one is called a squeezing candle pattern. So squeezing pattern means like you will find a series of candle moving one inside the another. You can see the candle is, you can see this is a green candle, and the next candle is moving just below, sorry, just inside the body of the previous green candle. If you look, this candle is again moving the previous red candle, this candle. Okay, so you can see this is called a squeezing candle pattern. Whenever you find such type of candle patterns, you just have to make a triangle sort of pattern. You can say a sort of, take from body to body, make this pattern, and just look for the break side, either upside or downside. If it breaks upside, it's opportunity for adding long, and if it breaks downside, it's opportunity for adding short. Just take from body to body and look for the opportunity. The squeezing candles are appears very rare, but whenever it appears, it's always a trading opportunity. So this called a squeezing type of candle. And one candlestick which is not discussed here is bullish and bearish harami candle, and let me find such example for you guys. So let me show the typical example of bullish or bearish harami. So bullish, this candle, let me draw first and explain to you guys. All right, so this one is called a bullish harami, and this one is a bearish harami. Whenever you find such, how to remember this? You can see this is a mother, this is, I don't want to promote any, I am not promoting racism or anything, but just to remember such things, I make it much more funnier for myself. So you can see a black girl is having a white baby. So whenever a black girl have white baby, it's always pleasing. You can say a pleasing for their family members are amazed, and hence the next candle is much more likely to be a green candle which will go upside. And so this is called a bullish harami. In bearish harami, where the white mother is actually having the black child, and hence they don't like it, they don't like child, so they abandoned it, and hence you can get you get a red candle. So guys, I am not promoting any sort of racism or anything, just for the educational purpose and just to remember the things. I make it much more easier for you guys. So if it's a black girl with white child, it's good for them. If it's a white girl and with a white mother and a black child, it's a bearish pattern. So this called this one is a bullish harami and this one is bearish harami. So guys, so it's actually so long. I am discussing about the candlestick, and you can see this candlestick. So what the next thing we have to discuss is about the risk management. So that video is actually everything about trading, how to trade and how to grow your portfolio. I've seen that people actually follow the signals and make few bucks for the few days, but the things sometimes never goes as we think. Like if I post 10 trades and sometimes it happens that more than 3 trades, you can say 4 trades go against us. So at that time stop loss get triggered, and we make losses. So what I found that most of the trader come across a situation, and at the end of the day, whatever the profit they gain for six consecutive trades, out of 10, if they take 6 consecutive trades, the profit are diminished to 0. So in order to overcome such problems, or you can say such demoralizing trading facts, you should you know what strategy I follow, I will share with you guys, because it gonna help you guys uh, in trading. And at the end of the day, even if you make 4 consecutive losses, your profit won't get diminished more than 50%. So what I do, let me tell. It's very easy. Let me just go for Bitcoin first. All right. It's trending downside. So what I share, just give me a few seconds before we go for the risk management strategy. So what I share was, we were getting a bearish pattern. If we look for a bearish divergent pattern, if you look for it was the 4-hour chart. Oh yeah, we were getting some sort of MACD crossover on the downside, and hence I said that there's possible chance of moving downside, then moving upside. So be safe, guys. And if you are watching this video, I've shared my call on breakout using candlestick. So I expect you to take that trade. All right. So what is my strategy? So basically, let's just take an example. Where is the text one? Let's just take an example, right? We have $100, right? Let's take, for example, we have $100, and we take a 10. You're gonna take a 10 trades. All right. So you have $100, and you are taking 10 trades. All right. If you know that you're gonna win 6 trades and you're gonna lose 4 trades, right? So even if you, in each and every trade, in 6 trades you make profit of 6 trades, profit of 10%. So yeah, we look for the basic mac. You are starting with $100. You took 10 trades, right? And you're gonna win 6 trades with 10% profit, and you're gonna take 4 trades with 10% loss, right? So what I do based on my performance report, I I just maintain my own performance report on how I take the trades. So what I do is, until and unless I make this $100 into $200, until and unless I make this into 2 times my previous investment, I won't increase my amount of trading. So basically, what I mean that if I start with $100, I will take n number of trades. I don't know when I will make $100 into $200, but I will take n number of the trades. Until and unless I make it $200, I won't increase the amount of buying of altcoins or any asset. So even if I take 10 trades, right, and I make 10% profit on 6 trades and 4% profit on 10 losses on 10 trades, so overall still I have my profit, like you can say 60%, it's 20%. So still I have 20%, that is $120, right? So still my portfolio is not diminished to like $100. So still my portfolio is increasing in a slow paced manner. Look for the situation. If you take 10 trades, you make 2 losses, right? and if you make like 8 profits, but ideally we register 15% profit on per, and a stop loss is not less than 5%, right? In such situation again, if your amount is constant, if you calculate just this 15 times your 6, that is $90. Sorry, 16 times, you're taking 8 trades, right? And you are just gaining 15%, that's a $15 per trade. So you just make your $120 in one trade, and even if you lost for 5% in the 2 trades, that's almost $10. So at the end of the day, you made your portfolio twice. So main target is to use the constant amount until you double your portfolio by taking n number of the traders. All right. So when certain situation arise, when you start with $100 and you make and you lose, actually initially you make losses like 5%, and you diminish your account by $10. That's almost $90. So now in this situation, you will make use whatever amount you have by dividing into 2 parts, that's $50. So now you will reduce your risk by just entering your position by using $50, and until you make 2 times the $50, you won't use much more amount than you have. All right, so this is what I do basically, and I try to reduce my losses rather than diminishing the profit at the end of the day. So basic fundamental thing which I want to discuss is just try to take n number of trades with constant amount until you double your constant amount. If what I mean to say, if you start with $100, try to double it the $100 by using the $100 in each and every trades. So at the end of the day, if by the end of the month, if you successfully profit $100, it's 2 times your profit. So in next trade, you just increase your amount by 50%. That's $150. All right. So in that way, this is called the turtle walking strategy, and it always ensures that you make profit in the slow manner, such that your portfolio does not get diminished. Alright, so this thing I want to share with you guys, because this thing is very much important, and in trading 50% of weightage is just for risk management. If you don't have proper risk management, even if you owe 750 Bitcoin or 1000 Bitcoins, it will diminish to for in few hundreds. So risk management plays very important role, and I want you guys to do such thing. If you are having 5k account, just use $1,000. If you are having 10k account, just use $2,000. So in such way, you can progress your account into huge number in bull market. And the main thing about trading is to protect your fund and increase your profit in slow pace manner. We don't want to build, we don't want to be rich in one day. And the gambling does not work in trading. If you are a smart trader, it won't work. And if you are very much lucky person and if gambling works, please go ahead. All right, so another thing today in today's session, I want to discuss about reading up the charts. So the charts, let me show you. If you don't understand this strategy, you can PM me, guys, and I will likely gonna solve your doubt. All right, so whenever I make charts like this, this in most of the chart, only the basic thing you want to see is this just to reward calculator, you can say tool which is available on the TradingView. you have to look at this price when you mark this point. And I don't know, my trading view always sleeps. All right, so whenever you use this tool, look at the right hand side. If right hand side, wherever the scale is, if you use the left hand side of your scale, look at that left hand side or right hand side of the scale, and you will find some gray color of price. You can find a gray color of, oh yeah. All right, so you can find a gray color of tagline on the right hand side of this scale. So this is our entry position. All right, whenever you see this gray color, see, I'm moving upside. This gray color is moving above. So this is our enter position. All right, so this is a stop loss, right? The red color is a stop loss because this is a long position where we're looking for, upside, asset to move upside. So whenever I on my chart, I post this type of using these tools, I put my entry position, which is available on the right hand side of your scale. That's 7608 is my entry position. What is my target position? A target position is also given in green. That one is 82157. And what is my stop loss? That also available right here, 6979. And everything is this. There is certain called that the risk to reward ratio. So this shows that how much risk is to enter this trade versus how much reward you can get. So if this number is greater than 0, or you can say greater than 1, the greater than or equal to 1, it's actually a good trading setup. And if less than 1, it's not recommend to take the trade. So if I post certain type of in my chart, I post using this tool to show my entry position. My entry position is like this gray color tag, this 7600 is my entry position. My stop loss you can find on the right hand side, red color, that's 7473, and my target is like in green color, that's, you can see this green color is 8176. Similarly goes for short position, and like this. So now 8190, the gray color price action, 8190 is my entry position. My target price is like 7629, and my stop loss is like 8363. All right, so this thing is these two tools which I use mainly in my putting up the calls. And even if you can find mostly this type of tools in each and every technical analysis. And this helps you to get your things done very easily. Like if I post like this at this point, I just post like this. My entry position is like 618. My target is like 8340, and my stop loss is 7423. So guys, this was all for today's session, and I know the video is very much long, but I hope that risk management strategy which I basically use it will gonna help you guys. So basically what I discuss about risk management is, until and unless you make or double your initial amount. Let's just take you use $100 as your initial amount, and until and unless you double your initial amount, you're not gonna trade more than $100. All right, so unless and if you start with $100, your main target is to convert the $100 into $200 by using the constant $100 amount. So even if you take 20 trades, until and unless you make $100 into $200, you are not gonna increase your position size more than $100. Alright guys, so today's session was actually very long, and thank you for your support guys. And if you have any query, you can PM me and I will likely to solve your doubts and whatever doubts. And I recommend you guys to practice this candlestick because it seems very easy by just looking the video, but when it comes in practicing, it's actually difficult task to find the candles. All right, so saying this guys, stay tuned, coming up with next video. We will look for fractals, and I'm much more interested in sharing the TD sequential trading strategy. So stay tuned guys, peace.